Hello Sector Watchers, welcome to the show. This is the 203rd episode of Sector Spotlight on Tuesday, the 16th of January 2024. My name is Julius de Kempenaer and I am presenting to you from Amsterdam in the Netherlands. I hope you had a great Martin Luther King Day and are ready for a new week of trading. We've already had the first day. It's the end of the day on Tuesday that I'm recording this. Ladies and gentlemen, this is Sector Spotlight. Let's start with a quick look at the asset class rotation, because a few things are happening here. Weekly RRG on the left, daily on the right, and Bitcoin, the tail way on the right, both on the weekly and the daily. We'll take a look at the chart in a minute, but I think we can all agree that it is still the strongest asset in this set of universe and over this time frame. So we can just take that away on both sides and fit the chart so we got a better handle on what's going on. If you look at the weekly, you can see how the US dollar and both commodity tails are shooting further into the lagging quadrant. So commodities are still on the outside. I don't think they're really interesting to look at for longer term positions right now. If you look at the US dollar, it started to slow down, and the more important thing is what's happening on the daily chart for the US dollar. You can see that rotation going towards the leading quadrant. You can see that as well for GSG and DJP. But when you take a look at the individual chart of those three ETFs, those three assets, then I think that the US dollar chart deserves our attention, and we're going to look at that in a minute. If we look at the stock bond rotation, then that's still in favor of stocks. You can see how the tails for high yield government bonds and corporate bonds are rolling over and all at a negative heading, and govs and high yield are already into the lagging quadrant, and you can see how the tail for SPY is still continuing into the leading quadrant. I gotta admit, it is a bit of a confusing market because we see very weak days, very good days, very weak days again, so the market is still trying to find direction. And I think if we look at the price chart of the S&P 500, we can see why that is. Let me quickly just get rid of those very long tails here. The US dollar I want to keep because that's an important one. I'm going to do the same here. So I'm going to take away DJP and GSG, fit this one. Let's get the US dollar out of the way here as well, because we're looking at that chart in a minute. And you can see how the strength of stocks continues. Interesting to see is how GOV and high yield are picking up. So they're kind of all in the right direction, which is kind of weird if you know that all of these tails are inside the benchmark. So that little loss of momentum in SPY over basically today is causing these big moves here. And you can now analyze, that's interesting to see, how there's a very short dip. So the segment on SPY is very short, but the segment on high yield is really long. The segment on GOV is mildly long, and corporate bonds are picking up, but they're definitely all these segments of today are all longer than for SPY. And that's why they are pushing in the right direction. The longer term trends, which I'd like to focus on for like the investment horizon of, let's say, 3 months out, 3 to 6 months out, still favors SPY, still favors stocks. Let's go for a few of those individual charts. Let's start with the S&P 500. So here's the daily chart of the S&P 500, and I think this explains or clarifies very well why the market is so confusing. We're in this range, we're pushing against that all-time high level. This is a very important high around 480, and we just came off that resistance area. Some people are already calling a double top here. It's way too early because it'll only be a double top once it executes, and the execution of that double top takes place when we take out this intermediate low, which is around 467. That's not happening yet. So only if we take out 467, we'll have a double top completed in the S&P 500. And the target area, if that happens, is not that far away. I'm labeling it around that 455, that green zone here. I think there's a lot of support in that area, as if and when the market will come down and complete that double top. But once again, it is way too early to call a double top. We're in trouble. Well, in trouble. We're facing difficulties. We're facing upside resistance. And we do need to break that to clear the way for a further upside. But it's very well possible that we will remain within the boundaries of this range before the market takes any direction. And when that happens, we will get confusing signals. We will get sectors all over the place. We will get asset class rotation all over the place. It's just what it is, and you got to deal with it. If we look at the weekly chart of the S&P, got the bigger picture here is that 480 level. And it's at the top of that channel that we drawn in last week, and the story remains the same. So even if we execute that double top, I believe that 455, 460 will be a very important support zone, and we'll see what happens then. I'm not ready to call for a market crash or something dramatic at this point in time. I want to show you the US dollar chart because I think there is an interesting development going on there. If you start with the dollar index, that's against the basket, you see how it comes off that support zone. We already started to accelerate today, and that's an interesting move because we're now well clear of this support zone and well clear of breaking further down. If we look at this on the weekly chart of euro dollar, then it starts to become visible here. We're challenging this rising trend line. We are now below the low of 2 weeks ago, and it becomes more clear when we do the daily chart of euro dollar, and then you can see how we're closing around this time in the US time zone, so we're getting this tick close below this rising trend line, this rising support line. But what's more important is something which I see as a flag, as a bearish flag, coming from this 111.40 all the way down in a short period of time to 108.80. Now we got this consolidation in this little flag form, and then the breakout today, which definitely is out of this consolidation pattern, but also below this rising support line and also below this previous lows, which was around 188, 108.80. We're kind of at that level right now. So euro dollar seems to be breaking down. That means strength for the US dollar. So for this, I think this could be a pretty crucial event, charting event in euro dollar, and going back to US dollar strength across the board. A little early, but the signs are good, and at the end of the week we will know a little bit more. To wrap up the asset class rotation, a quick look at the stock bond rotation. Looked at that last week. It's still going strong. We pushed to a little new high and we're still camping way above resistance and pushing to new highs. So very clearly still favoring stocks over bonds. What's going on in the growth value rotations? Still an unclear, unusual situation, I'd say. If you look at the weekly rotation of value versus growth, then you can see these almost vertical tails. And if I scroll them through history, then you can see what's happening. Let's put them all on there. So this is what's happened since October. You see that growth remains on the right hand side, value remains on the left hand side, so growth beats value, and that is still the case. You can see how in December we started to do a real sharp hook on both ends, and then again back, and it's starting to sort of become stationary on that position, which means that there is volatility and it's unclear, but they remain on their positions almost static on the RRG, which means that growth is still in a relative uptrend and value is still in a relative downtrend. versus the Dow Jones US, which is the entire US stock market that we're using here. And it continues. And now the last week, you can see how value jumps up and growth collapses. Well, not really collapses. Well, it's a collapse. Yeah, that's a big move. This is just today. So that is interesting. But the end conclusion is that growth is still beating value. Now, if you look at that on a daily basis, you will see a lot more granularity. And you can see how now growth is picking up versus value again. So we're going in the right direction, and you can see how this is also a very volatile picture of this value growth rotation. You can see the date here, so it's December 12. Value beats, and then it just goes down, little jumpy, and then here at the start of January, growth is nowhere to be seen, value is leading, and then all of a sudden you can see how this is now starting to move the other way. So maybe the conclusion should be that because the market was in trouble, growth is the go-to area for defense, which is kind of unusual, but it looks to be like that. And if we start combining that with size, it probably becomes even more unusual, because here you got large cap, mid cap, and small cap, and you can see that over the last period, last months, that money is moving out of large cap into small and mid caps. And that trend is still there. There is still, if I scroll through this, then these trends in favor of small and mid caps are still there. If I do this on a daily chart, it becomes, it's again going in the opposite direction. So here you see how large cap is now pushing into the leading quadrant, and mid and small caps are getting out of favor. And that sort of adds to the confusion or unusual constellation of charts, if you wish. Here, these are the longer term trends. This is what I kind of like to stick to. And that this small cap trend is undeniable. I wrote a blog article last Monday. Yeah, that's yesterday. On the relationship between large and small cap sectors by plotting the ratio symbols on an RRG. And that pretty clearly shows how small cap is in favor for pretty much all sectors except energy. Go back and look at that article if you haven't seen it. It's an interesting exercise. What's also interesting is if we put these two RRGs together on the RRG for where we have growth, value, and size all in one graph, and it's a drop down in your groups. If you go down, you can see growth, value, size. Just take that and you will get this RRG. And what I'd like to do now is take out the main indices. So this is the benchmark, we don't need that. I'm going to take out the small cap index because we've seen that. I'm going to take out the mid cap index, and I'm going to take out large cap. I'm taking out growth, and I'm going to take out value. So we only now have 2, 4, 6. Yeah, so we have the large, mid, small, and then the value and growth tails. And let me do the same here. So we're going to take away large cap. We're going to take this way. We're going to take growth away. We're going to take value away. Small cap away. Mid cap away. So we've got 2, 4, 6 here are the same. And what you see here, this is interesting because we've got small cap growth and small cap value moving in the same direction. We've got I should have done this one here. So we got value mid cap and growth mid cap. Growth definitely beating value, but they're moving in the same direction. And then you see value large and growth large, where value has started to turn around and money is moving out of growth large. So basically the only area where money is moving out on this time frame is large cap growth. And the market is kind of indifferent into where it is moving its money to, and small cap, both growth and value, seems to be in favor, as well as mid cap, both value and growth. If you look at the daily version of this chart, you will see again the kind of opposite. So if this is the leading trend, then this is the temporary setback. So we're looking at, you see growth large here, moving right in the opposite direction of growth large on the daily scale. I actually think that this is way high on the RS ratio scale. So there's plenty of time for this to move around and curl back up. And, you know, just trying to paint a picture, a possible path for what's going on. We could see this growth large move into leading and roll out and get back into sync with this, with the primary rotation of the market to move into small and mid caps, kind of indifferent to value or growth, especially in small caps. In mid caps, growth seems to be favored, and in large caps, it's definitely large caps to be favored because they're way on the right of value. But I think it's interesting to see how these different size indices in terms of style are disconnected from each other. They usually should move, or usually move like in opposite directions. They're like yin and yang, and moving, you know, in the exact opposite directions. That's not the case right now. So it basically tells us how the market is trying to find its way. Based on this analysis, based on this constellation, I'm looking for, if I look for industries, industry groups, stocks, I would look, or I would focus a little bit more on the maybe mid and small cap size stocks for new positions. I think that's the best takeaway that we can get from this RRG. For sector rotation, I'd like to keep it really short in terms of looking at the RRGs for the sectors, because not a lot has significantly changed since last week. The opposite movements are primarily still there, so not a lot of news there. The sector that I want to focus on is technology. You know, a lot moving on in technology, and if you look at the tails, then you can see how the tail on the weekly RRG is rolling over. It's still the highest reading on the RS ratio scale. So in terms of relative strength, technology is still the strongest. It's going through a little bit of a setback. And when you move to the daily version of the RRG, you can see how the tail of XLK is has already started to move up, and again trying to paint a possible path for the coming weeks. If this improvement continues and that tail is being dragged into improving and back to leading, with this high reading of XLK, I can totally see how this would then kind of drop into weakening and rotate back to leading, continuing to make XLK one of the leading sectors, if not the leading sector, in the S&P 500. The interesting thing happens when we start to dissect what's going on inside the technology sector, and we can do that by looking at the sector summary page. You can find that sector summary page on your dashboard, and if you go to the tools, scroll down, and you'll find sector summary. And the interesting thing is that here are all the sectors, but there is a little icon here, and that's the RRG icon. So when you go to XLK and you hit the RRG icon, it will actually zoom in and go to the industries inside the technology sector. We have the renewable energy equipment inside technology. I am not sure whether I agree with that classification, but the good news is that we are working on a complete overhaul of all of our classifications. That will happen hopefully somewhere at the end of Q1, maybe start of Q2, and we'll be able to do a much better job in slicing and dicing universes, instrument classifications, and all that kind of stuff. So for now, I'm going to take this away, fit the chart, and this is against the S&P 500, but we're looking at the sector. So I'm going to change the benchmark here to XLK, run it again, Oh, I should have done that. Where are you? This one needs to go. Fit. And now we can see which groups inside the technology sector are interesting. And there's a few that are pretty good. So computer services is kind of okay. It's rotating back in. So that's an interesting sector, or an interesting group, I should say. If you look at electronic equipment, it's in the right direction. It's got a nice heading. It's inside improving, needs a bit of work, but looking good. The sector that really stands out is semiconductors. Look at that tail. Pointing straight, it's just a little stint through, lagging, and now powering into the leading quadrant at an ever increasing speed. And that is interesting. And what I want to do with you is take a look at the stocks inside the semiconductor index. There's a few ways that we can do it, but I think that one of the most popular groups that people use to play semis is the SOX index. There's an ETF, SOXX, and we can look at the components of that index by using the advanced scan workbench. So diving into the technology index and diving into the semiconductors, the easiest way to do that is use the scan workbench and start with a blank slate. And what you do is you go to indexes and ETFs and you look for the SOX index, and it's right here, Philly Semiconductor Index. If you add that, it's a very simple scan. It's just group is SOX. Then you run the scan and it will give you 31 stocks that are inside the SOX index. Now what you want to do is save it to a chart list, and let's call it SOXX, save to list. Here's my list, and I can then chart that as an RRG. And here I have an RRG. Let me change this to SOX index. And now I'm looking at the 31 members of the SOX index against the SOX index as the benchmarks. And that allows me to find or look at the rotation of individual stocks inside the SOX index and find potential trading candidates. One of the easiest ways, I think, doing that is by highlighting the one line in the table below, which highlights the tail on the graph. And then with your arrow keys, you can actually toggle through the entire universe and look at the direction of that tail, the behavior of that tail. So I can do that really quickly. So AMD is looking okay-ish. It's going down. This is not good, not good, not good. Losing momentum. This is the benchmark. Not good. This could be interesting, but it's still a little bit too far to the left to my taste. This is one that I like. So what I then do is I actually bring up this chart here. So COHR. And do my analysis on this chart. And it actually looks pretty nice because we had this power move off this heavy support zone, put in a high correction, and we're now pushing against that new previous high resistance, which is pretty serious. If I look at here, it's acted as support, here's resistance, here's support, again as resistance. There's a flimmer of, well, it's probably resistance in this area. So this is something that has my interest. Here we're looking at relative strength versus SPY. I can change that to SOX, doing it right here. So I change my benchmark to SOX on both these charts. Update. And here I can see why that is in the position where it is, because we're just shy of 100 on the RS ratio scale, and we're pretty high. We're the highest reading on the RS momentum scale. So that's a good thing. You can see how relative strength is starting to bottom out. I can also move this to a daily chart, get a little bit more granularity. And here we are, big move today, pushing against resistance. So my take here would be watch for this stock to break 46 resistance to the upside, and it'll be a pretty good buying opportunity with, at that time, a good profit to loss ratio, because your stop loss can go at the previous high, at the previous resistance, that should start to act as support at that point in time. So that's one. Let's see if there's anything more to find. I like the longer tail, so this is a bit of a short tail, meaning that it is a very stable trend, not much going on there. This could be interesting. Let's take a look at the price chart. So this is the daily, again, pushing against pretty serious resistance. Strong RRG there on the daily. This is, bring it back to the weekly, because we're looking at the weekly RRG. That's an interesting one. If this takes out this overhead resistance area, I hope you agree with me that there is a lot of upside potential for Marvell Technology. Let's go to, this is too short of a tail. This is not good. It's not good. This is going down, down. NVIDIA, of course, NVIDIA. Coming back up, it's shaving that 100 level, but if we look at the chart of NVIDIA, I'm sure you've all seen that many times before, and that break above 500 was way important. Maybe even more important is the relative break to new highs. I can totally see why someone would not like to chase this move, because you know we did get like $50 all of a sudden after the break. Pretty good example how taking out overhead resistance sometimes can work like a spring. So the best approach here probably to see if we're lucky, if you're not in it yet, if you're lucky to get a pullback, ideally back to the 500 area for a renewed entry opportunity. The RRG will probably rotate further back and push NVIDIA into the leading quadrant again, making it once again one of the leading stocks inside the semiconductors, and therefore all inside technology as well. So look at a few more. Now we're getting into the lagging quadrant, so not too much going on there. No, no. So that's it. So we have we had a few interesting names. NVIDIA probably popping up. I think that the one that we had there, so Coherent and maybe Marvell, are worth looking at. Just a little bit of a peek on how I do the slicing and dicing and try to get to interesting possible trade ideas from an RRG of the sector going into the industries and then to the individual stocks. And that concludes Sector Spotlight for this week. Please remember, Sector Spotlight is available on demand on the Stock Chart YouTube channel, usually recorded and uploaded on Mondays. Today's Tuesday. Feel free to share your thoughts and ideas in the comments below the video. As usual, we all read them and I try to respond to most of them myself. Looking forward to seeing you again at a new episode of Sector Spotlight next week, same time, hopefully one day earlier.